All right, so once again, this is the chapter 7 and 8 perpetual inventory exercise. Here you go. You have a scenario here, okay? You are given a chart of accounts, so we will be practicing how to use the chart of accounts, and we will be practicing plugging our numbers into the inventory worksheet and also journalizing. Okay, we're going to journalize all of our transactions here, okay? So we got about 4 pages of journals that we can utilize to go ahead and practice this one section here. Okay, so going back to the scenario, right? Number 1 says your inventory tracking method is going to be perpetual, and we're going to be using moving average. So a nice, easy way to start off with with our uh, with our inventory. Okay. So in this case, on May 1st, okay, we purchased 500 brown mugs at $2.65 each with a freight of $100 on an account from Cuppies Co. And they gave us terms of a 5% 15 net 30. Okay. So in this case, right, let's practice journalizing first. So in this case, taking a look at our chart of accounts, what accounts are we going to be using for this transaction?
Mark 150.
Okay.
And then since we're buying it on the account, we have to use accounts payable.
Good. Okay, so account 201. So let's go ahead and journalize that. It is May 1st. We purchased some mugs, okay, on an account. Okay, so account 150 and 201. Now, if I purchased 500 units, okay, at $2.65 each plus $100 worth of freight, how much is my grand total that I am going to be putting in my journal?
1425.
1425, right? If you go ahead and do this, you can calculate it right here. 500 times $2.65 each plus 100 will give you the 1425. All right, that means I also owe, excuse me, 1425. Okay, and I will also include some notes here, just so that I can, keep track of my transactions. So, first off, who did I purchase from? I purchased from Cuppies Co. Okay, purchased 500 mugs. Okay, at $2.65 each. Okay, and we know it's on an account. Then they gave us a 5% discount if we pay within how many days? They gave us 15 days, if not the whole bill is due in 30. Excuse me. Okay, so 15 days, if not, whole thing is due in 30 days. Okay, so then we can give us a reminder. If we make a payment within 15 days, so 15 days from May 1st is going to give us May 16. If we pay on the 16th, we get to take a discount. Okay, so that is, we got to first properly journalize in our journal, right, with account numbers and all. Okay, and then we can go ahead and plug it into our inventory worksheet. So I'll also expand that. So today is May 1st. Skip over this section here. We purchased 500 units at $2.65. 65 cents each with a freight of 100. Okay. So in this case, what is my total purchase price?
$13.25.
Good. Plus 100 will give us $14.25. Okay. Now in this case, we're gonna go ahead and carry this into our inventory on hand, and because we are using moving average to answer our questions, do our costing method here, that means I am going to be constantly calculating my average cost per item. So in this case, right, when I calculate my 14.25 and divide it amongst all 500 units, I get $2.85. Okay? And what I'm going to do here is I'm going to actually drag the formula all the way down. So I'm going to have that automatically calculate for me so I don't have to do it myself. Okay. So there you go. I have 500 units at 14.25. Okay. And that's that one. Okay. Okay. Let's see what happened next. We are on May 5th. You returned 15 broken mugs for a full refund. Okay? You returned 15 broken mugs for a full refund. Okay, so let's take a look. What would I do with my accounts? Okay? How would I journalize this if I have to return 15 broken mugs for a full refund?
We are reducing the amount of accounts payable,
Okay.
and we are putting and then we are also reducing the inventory mug.
Good, right? We're going to be reducing the inventory mugs here. Now in this case, right, it is May 5th. Okay, so in this case, I'm going to be getting my money back because in this case, I never paid, right? They billed me, but I haven't paid them yet. Right? So that's 201. And it's going to decrease my inventory mugs because I no longer have those mugs available, right? I am getting a full refund on it. So who am I getting the refund from? Cuppies Co. And then you could say return or refund 15 broken mugs at $2.65 each for full refund. Since I only have one batch of inventory, right? I have to get a refund based on what the original purchase price was, which in this case, how much did I purchase each mug for?
$39.75.
Yeah, so in this case, $2.65 times 15 is going to give me $39.75. Okay, because I'm getting the full refund, so that means that's going to reduce what I owe because I never paid them in the first place. So I don't get my money back here. Okay. So that means I need to update my inventory now by going to my inventory worksheet, and today is the 5th, right? This time I am reducing my inventory by 15. It's still $2.65. Okay, but so that means my total cost is going to be whatever that 15 minus my 265 is, which is $39.75. So that means, am I reducing my quantity? Yes, I am. I'm reducing it by 15. Okay, so that means I should have $485. And here I'm going to be getting a refund back, right? For $39.75. So that means I am purchasing 485 units at a grand total of 13.85 and 25 cents. So then again, because I have my calculated formula right here in the middle for my average cost, it now increased because now I'm taking this 100 units and I'm spreading it across 485 units opposed to 500. Okay, so that's why it has increased to 85618. Okay, so here I know for a fact that I no longer have 600 units, so or 500 units. I have 15 less. So there you go. Right? Okay. So let's see what happened next. So that very same day, right? I put an indent here. You sold 10 mugs for $10 each for cash. Okay? You sold 10 mugs at $10 each for cash. Okay, so in this case, what accounts will I be using to record this?
Cash and mugs.
Okay, so cash, yes. Mugs
Cash
will be,
sale. No, you use mugs, don't you, to get rid of it out of them?
yes, that is part of the second journal. Good.
But it's cash and sales, the first one,
Correct.
and then cost of goods sold and inventory.
That's correct. Now, in this case, I did not mention sales tax. So yes, I do have a sales tax account on there. So again, go ahead and calculate the tax on that. Okay, so sales tax payable, right, is going to be account number 230. Okay, so cash is 102, sales is 401, sales tax is 230. Cost of goods sold is 501, mugs is 150. Okay, so that's exactly what I'm going to be doing here. All right, so in this case, it is the same day 5/5, right? We established that we received cash for our sales. We also established that we have sales and sales tax, right? Okay, and we also established that there must be a cost of goods sold. And we are going to reduce my inventory mugs. Right? So in this case, right, we had to count 102, 401, 230, 501, 150. Right? So let's figure out what my sales portion was. If I sold 10 mugs, so let me go ahead and write sold 10 mugs, right? If I sold 10 mugs at $10 each, what's my total sales?
$100.
$100. How much tax is going to be off of that $100?
$8.25.
Good. Okay, $8.25. So that means total cash collected is 108.25. Okay. So this is where I need to now stop here because I need to solve for my cost of goods sold. In this case, I don't know what my cost of goods sold is going to be. I actually have to calculate that on my inventory worksheet. So in this case, this is where I go ahead and go into my inventory worksheet. And today is the 5th of May, right? We sold 10 mugs. At what cost is my mugs that I sold?
Since they haven't been before or when you sold them, they were at 2.856186.
Okay.
That's what you would count as your cost of goods, or do you wait until you take the 10 out?
In this case, I need to calculate what my cost of goods sold is. Right now, I have 485 units. If I take that out, how would I know how much my cost of goods sold is? In this
Right.
case, I would
So
have
you
to,
take it out at the one it's at.
correct.
Okay.
So 2.856, okay, 186, okay. So now what is my total cost of goods sold here?
28.56.
Yes, $28.56. Okay? So that's how much it costs me. Now I need to update my inventory because now that is something that I am subtracting out. So in this case, this is where I am going to say that, well, I no longer have 486. I only have 476 left, or 475, excuse me. Okay? And then same thing here. I would have to take this 138.525, and I'm going to subtract that I sold $28.56 worth. So in this case, that's going to give me 1356.69. So then now when I recalculate my average cost per item, it is now roughly the same. It only um, it increased by 30,000th of a penny. Okay, because it's like six digits in. So in this case, I can go ahead and get rid of this. All right, so that's how we utilize the cost of goods sold section in the inventory worksheet. And now that I solved for my inventory, or I solved for how much it cost me to sell my items, right? It cost me a grand total for $28.56. So that means that's exactly what I need to pop in here. $28.56. Okay? And that's how much it cost me to sell 10 of those cups after making my refund and so on and so forth. Okay? So then, now that I finished the fifth, the next thing happened was on the 6th, I end up selling 20 mugs for $10 each to customer A on an account. And we gave them some terms. If they can pay me within 10 days, they can receive a 10% discount. If not, the entire bill is due in 30 days. Right? So in this case, we sold 20 mugs at $10 each on an account. Okay? So let's see here. What accounts will I be using to record this transaction here?
Accounts receivable,
Accounts receivable.
sales, and sales tax.
Good, right? That's the first portion. What else do we need to include?
Cost of goods sold and mugs.
Good. So in this case, I'm just going to copy this section here because the only thing that's different is that instead of receiving cash, I'm going to get an accounts receivable. So there you go. Okay. Let's see. I sold to them on May 6th, and my accounts payable account is 103. Okay. May 6th, and accounts receivable to be 103. Okay. So in this case, I sold 20 cups this time, right? I sold 20. I sold 20 mugs. This time I'm going to go ahead and put in to customer A, and I gave them a 10% discount if they pay within 10 days. If not, the bill is due in 30. So that means 10 days from now is going to be the 16th. If they can pay me within the 16th, then I will grant them their 1% discount. But if they do not pay me within the 16th, they have until the 5th of June to pay me, right? 30 days. There's 31 days in May, so they have till June 5th to pay me. Okay? So let's go ahead and calculate this. If we sold 20 mugs at $10 each, what's my total sales? 200. Mm-hmm.
Tax is $16.50. Accounts receivable is $216.50.
Okay, good. $216.50 is what they owe me. All right. I still need to calculate my cost of goods sold. So I'm going to go to my inventory worksheet. All right, because I end up selling on May 6th 20 more mugs. Okay. So now my current cost per item is that $2.856189. Okay. So what is going to be my total cost of goods sold here?
$51.12.
51.
I read it wrong.
Okay.
$57.12.
Good. All right. Good. Okay. Good. 57.12 is what it cost me to sell 20 of those mugs. So once again, I need to update my inventory because I just sold 20 units. So in this case, I started out with 475. Now I'm down to 455. Okay. Same thing with my total cost here. I sold $57.12 worth of my inventory. So that will reduce my cost of goods sold down to $12.99.57. Okay. And once again, my average cost per item has increased by 1,000th of a penny, 10,000th of a penny. Okay. So right now I have 455 units left remaining to sell. Okay. So here's the number I got. I got $57.12 for my for selling 12 mugs. Okay, 57.12. Okay. All right, so let's see what happened next. Okay. May 8th rolls around. We end up purchasing 250 mugs at $2.75 each with a freight of $50. So 250, 275, and 50 on an account at Cuppy's Co. And they gave us the same terms, 5%, 15, net 30. Okay. So I need to journalize the purchase of my coffee mugs here. So in this case, right, we've already done this before, right? We purchased our coffee mugs before, okay, on an account. So in this case, I'm going to copy the information right here. Okay. And I'm going to paste it here. Okay, with all the information because we're going to be essentially using the same exact accounts. But this time we just have to put the dates in separately. So again, May 8th, and I have to fix this because I did buy from Cuppy's Co., but I didn't buy 500. I only bought 250 mugs at $1.75 each. Okay. So, yes.
You have an extra digit in the mug inventory. account number.
Okay. So, if I were to purchase my mugs, 250 of them at $2.75 plus a freight of $50, what is my total purchases here?
737.50.
$737.50. Okay. So, now that I finished my journal, I'm going to plug those numbers into my inventory worksheet. Okay, it's May 8th. Skip over the cost of goods sold. We purchased 250 units at $2.75 each. And then we had freight of $50. So what is my total purchase price here?
687.50.
$687.50 plus 50 should give you your $737.50. So now that we made a purchase of inventory, we're adding to the inventory that we actually have currently on hand. So in this case, I need to increase my inventory quantity by 250. Okay, so 455 plus 250 is going to give me 705. Okay. Same thing here. I need to add my $12.99.57 plus an additional $737.50. So that's going to give me
$2,037.07.
good, right? So that's going to give me a average cost per item to be $2.88,946. Okay, it increased because we purchased the coffee mugs at a higher price, right? They were 10 cents more than they were originally that we purchased them originally on May 1st, right? So now that I updated my inventory, I now have 705 units available to sell. Okay. So that very same day, right after we opened up our inventory for the 200 mugs, we found that 50 of those mugs were the wrong color. Okay, and now we requested for a full refund, but the vendor decided to convince us that, hey, there's nothing wrong with these mugs. You can still sell them. So they kindly offer us 15% discount, and we accepted it. Right? So what do I do here with this allowance? Okay? If 50 of those mugs were the wrong color, and we asked for a refund, but they offered us a 15% discount.
So we didn't return our inventory. We're just making an adjustment to account payable and mugs.
Good, because in this case, they didn't give us a refund. They just offered us to get a portion of the money back to say, I'm sorry for sending you the wrong items, but you know what? To keep your business, how about I give you a 15% discount, so then, to reprimand for my mistake or our mistake, whatever it is, okay? So in this case, that's correct, right? We're not returning the product per se, but we are adjusting our accounts payable, because now I owe less because they discounted those items that they originally charged me for. So in this case, accounts payable is 201. And because I placed all of those items in my inventory, okay, I need to take out, because some of those inventory items are paid at the discounted price. Okay. Now, in this case, right, how would I be able to figure out what my discounted price is? We know,
You take
go ahead,
take the two or take the 50 times the 275
okay,
and then multiply it by the 15%.
good, right? So in this case, I'm going to get an allowance for 50 mugs, wrong color, for 15% discount. Okay? So that's exactly right. We're going to do here is we're going to calculate what the 50 mugs were at the original price of $2.75, right? That was this batch that we just purchased, right? And we're going to figure out what 15% of that is. And that's going to give me $20.63. Did you get that number?
Yes.
Okay, $20.63. So that means I need to go into my inventory and adjust that because those 50 mugs that I purchased are paid at a discounted price. And I originally recorded them at full price. Okay? So in this case, am I really returning anything? No, I am not. But I know it's going to be for the $2.75, and I'm going to go ahead and put my numbers here. Okay, saying that it's 50 times the 275, and I'm getting a 15% discount. Okay. Again. Okay, that's going to give me a negative 20 and 63 cents. So again, this doesn't affect my quantity, but it does affect my total cost because I'm getting a refund for that $20.63. So in this case, it will decrease it down to $20.16.45, which will also decrease my average cost per item to $286.02. Okay. Okay. So because now I am spreading the freight and the cost, the total cost amongst this, but my cost is lower now. Okay. All right. So let's see what's happened next. Okay. On May 10, you sold 30 mugs for $10 each for cash. Okay. You sold 30 mugs for $10 each for cash on May 10. So how am I going to record this?
Cash and mugs.
Okay, so
You
cash
probably
is
debit cash and credit mugs.
okay. So remember, you need to record the sale first.
Keep forgetting that. Sorry.
No worries.
Cash and then sales and sales tax.
Okay, and then you can yes, there you
Yeah.
go. Yeah, so I'm just gonna go ahead and copy this right here. Now in this case, right, as you can see, I reached the bottom of my journal page. So what I should do here is I should add my description so then, because I'm splitting my transaction into two different places, right? In this case, they're two separate transactions, but I want to make sure that I know that I at least sold 30 mugs, right? From this transaction. So then I can also know that when I split the page over, right? At least I know for a fact that how many mugs did I sell. And then I'm also going to recognize the cost of goods sold here, okay, on the next page. And I can adjust this to say that we sold 30 mugs. Okay, so again, if I sold 30 mugs, what's my total sales here? Sold 30 mugs at $10 each.
$300.
Okay, and the tax,
$24.75.
grand total cash should be $324.75. Okay, and now I need to solve for my cost of goods sold again because I sold 30 mugs. So today is May 10. I sold 30 mugs. What is my current average cost per item right now?
$2.860260.
So that's going to give me a cost of goods sold to be
$85.81.
$85.81. So I need to update my inventory because I no longer have 705. I just sold 30 of those, so that should give me $675. And I do the same thing to my total cost because I sold a total of $85.81. So that should drop my inventory, my total cost to $1930.64, giving me an average cost per item to be pretty much roughly the same. It dropped by 600,000th of a penny. Okay. Ugh, excuse me. So here you go. I have $85.81, and that's how much it cost me to sell those 30 mugs. Okay. So then May 12th rolls around, and you end up selling 60 mugs at $10 each to customer B on an account. Terms were 10%, 10 net 30. Okay. I sold 60 mugs to customer B on an account. Okay. So, yes, we've seen this transaction before. We're going to be dealing with an accounts receivable. Okay. So I'm going to copy this entire section here, right? Because it's rinse and repeat, right? We're going to be receiving an accounts receivable on May 12th, right? But this time, right, we sold 60 mugs to customer B, but we also gave the customer B the same terms as customer A. Right? We're giving customer B 10 days to pay so they can receive a discount. If not, they have to pay within 30 days, which is in this case, they have until the 11th of June. Okay. So in this case, if I sold 60 mugs at $10 each, what is my total sales?
600.
600. sales tax.
$49.50.
Okay. Giving me a grand total that they owe me to be $649.50. Right? And now we need to calculate the cost of goods sold once again. Okay. So this time I have sold 60 mugs this time at $2.860200. So that means, what is my total cost of goods sold here? If I sold 60 mugs at 2.860200.
171.61.
Good. 171.61. So once again, because I sold, I need to update my inventory. So I started out with 675 minus 60 will give me 615. Total cost, right? I sold a total of $171.61. So that should definitely drop my total cost to 175,903. Okay. So in this case, when I calculated it, my average cost per item actually increased back to that 300,000th of a penny. Okay. So I only have 615 units left available to sell. And here I sold 171.61. 171.61. 171.61. Okay. So then May 15 rolls around and customer B decides to return 30 of those mugs for a full refund. Okay, so in this case, customer B decided, I don't need these cups anymore. So they returned 30 of those mugs for a full refund, and it's only been 3 days? So you accepted it and you are going to give him the full refund. Okay. So, right, how do I give customer B a refund?
Well, we are giving a sales return allowance.
Sales returns and allowance for 406.
And then we are reducing customer B's account receivable balance.
Okay. So we're going to reduce the customer. Okay. 103.
Yes.
What else do we need to refund as well?
Oh, well, because there's no mention, so we have to do a sales tax payable.
Yes, in this case, because they're returning the product back to us, so therefore we have to give the portion of the sales tax money back as well. So 203. All right, so therefore, let's go ahead and update this. So it is May 15. We have a sales returns and allowance. Six. We have to give them their money back. So sales tax payable. And because customer B never paid, right? So therefore, we need to find a way to reduce their accounts payable. Now, in this case, accounts receivable. Okay, accounts receivable. We originally charged on their account, so we increased it by debiting the account. So in order to reduce accounts receivable, we are going to credit the accounts receivable. And that will be the refund here. Okay? In this case, because customer B never paid us in the first place, we need to reduce what they owe me and reissue them a new invoice with the correct amount that they actually owe me. So in this case, let me see, sales tax was 230, accounts receivable is 103. Okay. So if they are returning 30 mugs,
Sales returns is 300.
good, right? Because we originally charged them $10 per mug. They are returning 10 of them. So that's going to give me, or sorry, they're returning 30 of them for $10 each. So that's going to be $300. How much is the tax going to be on those 300 mugs?
$24.75.
Right? So therefore, in grand total, how much am I going to be reducing customer B's account?
$324.75.
$324.75. Now, what else do I need to include?
We are putting the mug back into the inventory.
Yes, you are. In this case, realistically, you would never do that, right? You would put it in a different account under inventory, but it'd be like refurbished goods or, it'd be a completely separate account. But in this case, I just want you to get the general idea of what's going on. So in this case, I'm going to put it back into inventory. Okay? So in this case, it's going to go straight back to mugs. Okay? And what's going to be my credit account?
Don't you put it back into cost of goods sold because it has to be added back in?
Correct, right? Because it's as if you never sold it. So we have to undo the cost of goods sold. So 150 and 501. Okay? So now we have to figure out how much it's going to cost me to put back into my inventory. So in this case, let me write here, customer B returns 30 mugs for full refund. Okay, so now we got to shove it back into my inventory worksheet. Now, here's the question, right? How do we put it back into my inventory? Well, you should do it this way, okay? Especially because we're using moving average, you definitely don't want to make any mistakes, all right? Or have to redo or undo. In this case, you're just going to put it back and calculate it at what it cost you today and right now. So in this case, right, when I originally sold it on the 12th, right? And it cost me $2.86 and 0.2000, right? If I were to refund it for that exact amount, that means I have to go back and have to adjust all of the numbers to get the correct average cost per item. In this case, that is more work for you. So the other acceptable method you could do is just add it back in exactly for what it's costing you as of right now. Okay? So those are the two methods. So if you prefer to go ahead and add it back in there exactly how you charged it, right? Think of it this way. What if customer B didn't return the products until maybe a week later, right? And you've already sold all of these amounts, right? If you end up putting it back for the average cost per item and you end up putting that money back, what happens is you have to go back through the transactions and adjust all of those numbers all over again. That means you have to go back to your journal and adjust those numbers again as well too, because now your cost of goods sold numbers have changed and adjusted accordingly. So that's why I recommend you in this way. It's easier to just go ahead and just waive that and just add it back to what it cost you now versus having to go back through all of that problems and have to readjust every single sale and every single cost of goods sold that you've done so far. So in this case, we're lucky because we sold and they just returned. But in this case, the difference between the average cost per items are not that big of a change, right? So in this case, our numbers should more or less be more closely accurate than it is if we had to go back and do everything all over again. Okay? So in this case, we're lucky here. All right, and that's what I'm gonna do. I'm not going to put the money back from what it was originally costing. I'm going to go ahead and utilize that new average cost per item and put it back into my inventory accordingly to that number. So in this case, 15, we're going to refund 30 units, okay? My average cost as of right now is that $2.86 okay? So what is going to be my total cost of goods sold that I'm putting back into my inventory? $85.81, okay? So again, this is just so that it saves you a lot of headaches, and this is what you do if you choose not if you choose not to put it back for the same exact cost that you originally had it. Okay? Yes.
So if we were using LIFO or FIFO, we would have to do it then at the original cost?
Yes and no, because it depends. If you're using LIFO, let's say you sold all those units out again. What number are you going to use then? If you already sold out your last batches of units,
Yeah.
then that's where you have to go take out whatever the next batch of units are. You can, again, you can, if you want to do it like that, make it as precise as possible and follow the rules of what the costing method is. But then it's going to cause you a lot of troubles because then you might have to undo or recalculate, fix this and fix that. And that's going to cause you a lot more problems in the future versus than just going ahead and just using it this way, right?
So
But
then if you had LIFO, you would just use whatever the last one that was available is?
correct. Available
Okay.
is correct, not what you just last purchased. Because what if that empty that crate was empty?
Okay, thank you.
And that's going to be for the next chapter 7 and 8 review for part 2. We're going to use LIFO and see what happens when we use LIFO. Okay. So in this case, I'm going to add it back for $85.81. Okay. So again, this is just because I choose to not have to go through that headache. So I'm going to show it to you this way. And like I mentioned before, yes, you can add it back for what you originally costed out for. It just affects every other transaction after that. Okay. So again, you could do either way. In this case, I'm showing you a way to do it. Right? So therefore, I need to add back 30 units. Okay, so in this case, I have to subtract it because it's a negative number. Okay, so that means I don't have 615, I have 645. And then I need to add back that that $85.81. Okay, so that's going to increase it back to 1844.84. All right, so that's going to also bring up my average cost per item again by 6/100 of a penny. Okay. All right, so now you have 645 units available to sell. And it cost me $85.81 that I have to put back into my inventory. Right? All right. So let's see. May 18. Wait, actually, no, sorry, I skipped one. So right here, after we return the 30 mugs for customer B, we also sold 25 mugs for $10 cash. Okay? We sold 25 mugs for $10 cash. Okay? So, same day, it is May 15. Okay, and we sold uh, 25 mugs for cash. So I can go ahead and look at a previously existing journal here where I had cash sales. Okay. So that's the beauty of technology, is you're able to take some shortcuts to go ahead and copy and paste your transactions because they're exactly the same. Okay. Only difference is you just have to modify your description here and you say you sold 25 mugs. So if I sold 25 mugs for $10 each, right? $10 each. How much is my total sales?
250.
250. So 25 times 10, 250. Oh,
Taxes 2063.
2063. Let me equal around that. Okay, 2063. So in grand total, we got 270.63 worth of cash. So then now I need to now sell my 25 mugs. Okay. So what's my average cost per item? Is that $8 at $2.860209. So that's gonna give me my cost of goods sold to be
71.51.
$71.51. So therefore, I'm gonna update my inventory because I no longer have 25 mugs. So I should have now 620. Okay. At a new total cost of $17.7333. So that should drop my average cost per item by 700,000 of a penny. Okay. All right. So now I have 620 units left to sell, and I just sold 25 of those mugs for $71.51. That's what it cost my business to sell those 25 cups. Okay. All right. So then May 18 rolls around, and then customer A decides to pay in full with cash. So May 18, customer A decides to pay in full with cash. Right? So let's take a look. When did we sell to customer A? Let's see. We sold to customer A on May 6th. Okay, we sold to them 20 mugs for $10 each. Okay. We also gave, let me see, did customer A return anything? It doesn't look like there was any returns or anything there. So in this case, they owe us for whatever they owe us. Okay. So let's take a look at our journal. How much does customer A actually owe me? So customer A, right, owes me a grand total of $216.50. Okay? We gave customer A terms, 10% if they pay within 10 days. If not, the bill is due in 30. Did customer A meet the discount due date?
No.
No, they missed it, right? Because if today is the 18th of May, 10 days from the moment we sold to them was the 6th. So that means 10 days from now would have been the 16th. They just barely missed the discount due date because they're paying on the 18th. Okay? So then what happens now? That means they paid in full. So how do we record that we received a payment from customer A in full with cash?
Debit cash and credit accounts receivable. Well, they were on, yeah, accounts receivable.
Correct, correct, correct. So in this case, right, that's what we have to acknowledge is we are receiving cash on our end, right? Right? And because they owe me, right? And they're paying for what they owe, we're going to reduce the accounts receivable by saying they don't owe me anymore because they made a payment. So that means we're going to reduce the accounts receivable. Okay? Now we already established, right? What was the total amount that customer A originally owed me, right? They originally owed me a total of $216.50, right? Which includes the tax as well because they didn't get a discount. They recognize that they owe me this amount, so they have to pay in full because they missed the discount due date. So therefore, I that means I should be receiving for the full amount of the $216.50. Okay? And that's going to reduce what they owe me by $16.50 because they no longer owe me anymore, right? And all I can say here is received payment from customer A in full. Okay, because they paid me in full. Okay? Nothing else because in this case, right, we already took out the inventory that we sold to them. Yes.
Okay, so just so I can program this in my head, we don't mess with sales tax until, unless we sell, we add it in,
Mm-hmm.
and then when we pay our tax liability is the only other time we mess with that account.
Yes and no. Because remember,
Well,
if we
yeah,
return the product, we have
they
to
return.
reduce
Yeah.
it. Yes.
Okay. All right. Thank you.
Mm-hmm. And now in this case, right? We'll talk about sales tax when we dive into actually what we already talked about sales tax, right? It's our responsibility to pay for it, but in this case we don't we mostly talk about sales tax in QuickBooks, right? If you remember, you have to pay for your sales tax every quarterly, every month, every maybe if you're a small business you can get away with at the end of the year. That is a responsibility that yes, the company has to pay, but you don't necessarily have to pay it unless you are scheduled through the IRS, right? That you made an agreement of when you need to pay your state and local agencies, right? So in this case, yes, that's the only time we will mess with the sales tax if we have to pay for it. Yes. Okay. All right. So they're going to receive payment from customer A in full. Okay. And again, because we're just receiving a payment, we didn't sell to them, we already sold to them. So there's actually really no point after that to add anything other. Okay? Right? Okay. So let's do this last transaction here, and then we'll take a quick break here. Okay, so in this case, the last transaction on the 18th of May is we actually end up selling more inventory we sold 50 more mugs at $10 each for cash. Okay. So we end up selling more inventory for cash. So in this case, this is another one that we have to separate our transactions for. Okay. It is still May 18. Okay. And then of course, because I'm splitting them up, I need to make a note here that I sold 50 mugs. Okay. Right? Because on the 18th of May, we end up selling an additional 50 mugs for $10 each for cash. Okay, so there's my sales right there, and I also have to include my cost of goods sold because I have to update my inventory as well for 5/18. Okay, and we sold 50 mugs. Okay, so in this case, right, if I sold 50 mugs for $10 each, what was my total sales?
500.
500. How much is my sales tax?
41.25.
41.25. So in this case, I should have received a grand total of $541.25. Okay. So once again, I need to figure out what my cost of goods sold is. So May 15, I end up selling 50 units at the $2.860202. So, I guess Excel picked up what I'm doing here, so it figured it out for me that my total cost of goods sold is $143.01. Okay? For selling 50 mugs. Okay? So I need to update my inventory once again. Okay? So I have 620 minus 50. I should be left with 570 mugs left. You have to update your total cost here because you sold $143.01 worth of inventory. So that should drop your total cost to $16.30.32. Okay? Which my average cost per item did not change after that sale. Okay? So I have 570 units left, and I sold 50 units, which cost me $143.01. Okay. All right. And I sold 50 mugs. All right, so I'm going to stop here. Okay, so that means when we come back from the break, we're going to pick up from May 20th. Okay. All right. So,